Hello everyone and welcome to Momentum channel. In this video, we're going to take a look at 3 Dividend King stocks that you can buy and hold forever. All of these 3 stocks actually does pay their dividend, currently yielding over 3%. And as we mentioned, they're considered to be Dividend Kings. Well, what is meant by Dividend Kings when we are talking about in the context of the stock market? A Dividend King is a category of S&P 500 companies with annual dividend increases for at least 50 consecutive years. In other words, all these 3 companies that we're going to take a look at have been increasing their dividend year after year for 50 years or more. So without any further ado, let's get into it. The first company for us to review is no other than Northwest Natural. It's a gas utilities company, and the company, through its subsidiary, Northwest Natural Gas Company, provides regulated natural gas distribution services to residential, commercial, industrial, and transportation customers in Oregon and Southwest Washington. The company was in fact founded in 1859 and is headquartered in Portland, Oregon. Looking at the dividend yield for Northwest Natural, it has a dividend yield currently at 4%, and it has a dividend safety score of 61, considered to be safe. In terms of the size of the company, it is considered to be a small cap with a market capitalization of $1.47 billion. But in terms of the stock price volatility, the company has a beta score of 0.36, which suggests that the stock price is very low in terms of volatility. A beta of 1, actually indicates roughly about the same volatility level as the general stock market, and any beta score under 1 suggests less volatility. In this case, it is a good sign for a company if you're looking for a stock to invest in that has less volatility overall. In terms of the last trading price as well, you'd see here the stock was last traded at the price of $47.96. Moving on, if you look at some of the key metrics from a dividend perspective, the company's payout ratio is at 68%, and they have a forward payout ratio of 72%, which is considered to be low for utilities. This suggests that the company and its stock has a lot of room to grow its dividend for the years to come. In terms of their dividend streak, you'd notice here that the company has been paying its dividend for the past 66 years, and in all of those years, year after year, they have increased their dividend amount. Their annual payout in terms of the dividend is currently at $1.92 per share, and the company does pay its dividend on a quarterly basis in the months of February, May, August, and November. Looking at the company's performance during the recession between 2007 and 2009, you notice here their recession sales was down by 21% or close to 22%, which is below average growth during the 2007-2009. Whereas on the other hand, if you look at their stock price return, they did better. In fact, their stock was only down by 10% compared to S&P 500's decline of roughly about 55% between 2007 and 2009. So in that sense, they did way better from a stock performance return. Looking at the valuation metrics, the NWN's current dividend yield of 4% is 30% above its 5-year average of 3.08%. So historically, for the past 5 years, the average dividend yield for the stock is at 3.08%, and this indicates that the stock may be undervalued unless you believe that the company's outlook has weakened. We are going to, of course, take a look at some of the other metrics. For instance, we are going to take a look at the company's sales, the number of outstanding sales. We're also taking a look at analyst estimates just to get a better sense of where this stock is heading. If you look at the company's price to earnings ratio, their forward price to earnings ratio showing to be at 18, it is again below their own 5-year average of 26.5. In other words, the stock looks cheap compared to how the market has valued it in the recent years. And similarly, if you compare that to that of the sector price to earnings ratio, forward sector price to earnings ratio for utility sector, it is better than 18.3. Again, it's a good sign there. If you compare the stock price, their current stock price, to that of their 52-week or 1-year price range, do you see a lot of room to grow? The $47.96 is about halfway through, a little bit leaning towards the lowest range of the past 1-year stock price. The lowest price for the stock in the past 1 year was at $42.44, and the highest was at $56.39. Looking at the total sales for the stock, there is a little bit of that cyclicality and ups and downs, but the last 12 months, the stock the sales for the overall company is showing to be $818 million, and it is showing a increasing trend since 2018. Year after year, the sales has been growing. The $818 million in sales is the highest in the past 10 years, with the only exception being the year 2011, where the company had its total sales of $828 million. In terms of the outstanding shares, ideally would like to see a company that they reduce their number of outstanding shares. This is not the case here for the company. And in fact, you see that gradually over the past 10 years, they've increased their number of outstanding shares. Though the amount of increase has not been that drastic and is very steadily but slowly increasing their number of shares. It's not the biggest red flag in that sense. In terms of the stock price return, we're going to take a look at the past 1 year. On the chart at the bottom right, and in the chart at the bottom left, you're taking a look at the past 5 years. You notice for the past 5 years, the stock price has been down by 23%. And so if you had invested in this stock in the past 5 years, from an appreciation perspective, actually your valuation of the investments have gone down. This doesn't take into account, of course, your dividend income that you've been collecting. However, in the past 1 year, the stock is actually up by 6.44%. To us, this just suggests that the stock could actually recover from its lows compared to the past 5 years if it continues to increase its sales, if it continues to perform well. So there is room to grow for the stock. In the meantime, you are collecting that 4% dividend yield at this time that they have been consistently paying year after year for the past 66 years. From a valuation perspective, if you look at the tip ranks and analysts on covering the stock, there are 3 analysts, with one of them having a buy rating, one of them having a hold rating, and one of them having a sell rating. The lowest price range by analysts in the 1 year is at $49, and the highest estimate by analysts for the 1 year, 12 months forecast is at $74, giving us an average of $57.33 based on the 3 analysts covering the stock on tip ranks. If that holds true, that shows an upside of close to 20% for the stock in a 1 year time frame. We are also taking a look at the stock price target for 1 year stock price target based on Yahoo Finance, and you notice here the stock price there in the 1 year target is at $56.50. And if you look at Simply Wall Street and analysts covering there in terms of whether the stock is undervalued or overvalued, currently the current price according to analysts, and comparing it to a fair valuation for the stock, the analysts on Simply Wall Street believe that the stock is undervalued by 3.4% at this time. All right. Before we move on and take a look at the second stock, I do have a small favor to ask you. We've been putting a lot of time and effort in making this video, and we post a lot of different videos around investing in the stock market, dividend stocks, growth stocks, as well as ways to reach financial freedom. And I really appreciate if you can give this video a thumbs up, and if you could subscribe to our channel here on Momentum Finance. We post several videos every week, and we hope to have you join us in our journey. Thank you. All right, with that out of the way, let's take a look at the second Dividend King company that we are recommending to buy and hold forever. And this company is no other than Coca-Cola, which was founded and incorporated in 1892 in Atlanta. Coca-Cola, or also known as Coke, is a carbonated soft drink manufacturer by the Coca-Cola Company. And the drink's name actually refers to 2 of its original ingredients, coca, leaves, and cola, nuts. If you look at the dividend yield for Coca-Cola, it is at 3.09% at this time. And in terms of their dividend safety, it has a score of 8T, which is considered to be safe. The market capitalization for Coca-Cola is at $235 billion, which suggests the company is actually a mega cap company. And what's also positive for us to see is the fact that the stock overall is considered to be less volatile than the overall stock market, with a beta score of 0.66. Coca-Cola, of course, has a number of different brands. Some of them are outlined here. For instance, things like Simply, including their juices that they offer, or for example, even Fanta, and a number of others that you see here, but many more brands that they have as part of their overall suite of products that they offer as part of the Coca-Cola company. Let us take a look at some of the key metrics from a dividend perspective. Coca-Cola does have a payout ratio currently at 74%, which is edging a little bit higher for consumer staples companies. And their forward payout ratio is at 72%. Ideally, we would like to see the payout ratio to be under 60% and perhaps higher than 20 to 30%. In this case, with a payout ratio at 72%, with the forward payout ratio at 72%, it's not in the ideal range, and it's edging a little bit higher for consumer staples. It is still overall accepted given the fact that Coca-Cola is such a reputable brand, and their sales has proven to be well sufficient for them to be able to sustain their dividend payments. And you can see here they've actually have a history of 58 years of paying dividend uninterrupted, making them a Dividend King, the second Dividend King stock that we are reviewing here. And they've increased their dividend year after year for the past 58 years. In terms of their sales during this recession, actually they did quite well. During the recession of 2007-2009, their sales was only down by 4.8%, which is considered really above average growth compared to that of other companies and how they did during that time frame. Their stock price, though, that was down by 31% during that time frame, which again was better than that of S&P 500. Coca-Cola does pay its dividend on a quarterly basis in the month of April, July, October, and December, and their annual payout is at $1.68. Looking at the valuation metrics, Coca-Cola's current dividend yield of 3.09% is about in line with their 5-year average of 3.29%. This suggests that the stock may be reasonably valued today. Additionally, Coca-Cola's forward price to earnings ratio of 23.5 is about in line with their own 5-year average of 23.7. As a result, the market appears to be valuing the stock similarly to how it has valued it in the past, suggesting that Coca-Cola could be fairly priced if you believe that its health and long-term prospects are solid. And if you compare that to that of consumer staples, for the consumer staples, the sector price to earnings ratio is at 20.5. From a 52-week price range for Coca-Cola, the last trading price of $54.44 at the time I'm making this video is hovering a little bit closer to that of the 52-week high price, which was at $57.48. The lowest price that Coca-Cola has reached in the past 1 year was at $47.96. Looking at the total sales for Coca-Cola, the last 12 months is showing definitely improvements compared to the 2020. In fact, it's hovering at $36.4 billion in terms of total sales. And that being said, though, since the last 10 years, you notice how gradually this total sales for Coca-Cola has declined. There was a little bit of recovery back in 2019, but 2020 continued that decline since the past 10 years. Something for us to be mindful about. However, the stock overall in terms of volatility and the stock return has done quite decent. If you look at it, the past 5 years, the stock price has been up by 27%. This does not take into account your dividends. And in the past 1 year, the stock is also up by 10.9, close to 11%. Again, this does not take into account your dividend income that you've had. And as we mentioned, Coca-Cola has been paying its dividend uninterrupted and increasing it solidly for the past 58 years. Looking at the stock price forecast, based on Analysts on TipRanks, Coca-Cola's 1 year stock price is an average of $62.13, and that shows an upside of 14% plus. This is based on 15 analysts on TipRanks covering the stock, with 9 of them have a buy rating and 6 of them have a hold rating, resulting in a moderate buy rating for Coca-Cola. And according to analysts on Yahoo, the 1 year target price established for Coca-Cola is at $61.93. And if you look at Simply Wall Street from a valuation perspective, if we compare their last trading price to their fair valuation, according to Simply Wall Street analysts, the stock is undervalued by 26.9% with a fair valuation of $74.50 at this time. All right, lastly, let us move on and take a look at this third Dividend King stock for you to consider. And this company is called National Fuel Gas. It is traded on New York Stock Exchange with ticker symbol NFG. It has a dividend safety score of 95, which is considered to be a very safe dividend payer. They are a mid-cap company with $4.67 billion in market capitalization. National Fuel Gas does pay a dividend, currently yielding 3.56%. The National Fuel Gas Company, or NFG, dates back to 1821 when U.S. first natural gas well was drilled and used to fuel streetlights in a small town in western New York. And today, the company is a vertically integrated natural gas company with interest in upstream exploration and production, midstream pipelines and storage, and downstream regulated utilities in Pennsylvania and New York. With its financial flexibility, the company looks poised to continue its impressive dividend streak. The last trading price for national fuel gas was at $51.19. From a volatility for the stock price, it is again considered to be less volatile than the general stock market with a beta score of 0.60. All right, let us take a look at dividend key metrics. The payout ratio for the company is at only 48%, and their forward payout ratio is even lower at 42%, which is considered to be very low for utilities. This again is a good sign, resulting that the company has a lot of room to grow its dividend for the years to come. They have been paying their dividend uninterrupted for the past 50 years and increased it year after year during those entire 50 years, making them a dividend king based on our rating and definition of dividend king companies. During the recession, the company's sales was down by 25.3%, which was below average based on comparison to other companies and their growth during the recession years. And the stock price was down by 40%. That one, from a stock price return though, it beat S&P 500. As we alluded to earlier, S&P 500 price for the stocks was down by 55%. The company does pay its dividend quarterly in the months of January, April, July, and October, and does pay an annual dividend amount of $1.82 per share. Looking at the valuation metrics, NFG's current dividend yield of 3.56% is 10% above its 5-year average of 3.23%, which indicates that the stock may be undervalued unless you believe that the company's outlook has weakened. It's also worth noting that NFG's forward price to earnings ratio of 11.8, which is quite low, is well below its own 5-year average of 15.9, and the utilities sector, which is at 18.3. An unusually low price to earnings ratio means that investors may have become pessimistic about NFG prospects for growth. So keep that in mind. That being said, though, if you believe that the company's health and long-term outlook remain solid, then the stock could be attractively priced, really attractively priced in that sense. These can be hard judgments calls to make, but maintaining a well-diversified portfolio, keeping a focus on dividend safety, and reviewing a company's financial charts can be a good sign for you to reduce your risks. If you're interested to find out more, these details are actually extracted from based on this sources of Simply Safe Dividends, and you can find out more information there. From a 52-week price range, the stock price is hovering a little bit closer to the highest for the past 1 year. The highest price in the past 1 year was at $55.18 and lowest was at $38.17. That being said, it does actually make sense to see that the past 1 year stock price return is showing to be a massive 24.76%. That's remarkable return. This does not take into account the dividend income. The past 5 years, though, the stock is showing a decline of about 8.88%. In terms of the sales, you see a little of that cyclicality with ups and downs throughout the years in the past 10 years. The last 12 months, the company's sales is actually showing to be $1.67 billion, which is higher than that of 2020. But you see that in 2019, for instance, they had $1.69 billion in sales, and definitely are down compared to that of 2014 or even 2015. So the sales of the company is definitely declining a little bit, though there are some signs of recovery, as you see, compared to, for example, in the past 12 months, how they're doing. In terms of the outstanding shares, ideally we'd like to see a declining trend. Here it is showing a kind of increasing trend, with the outstanding shares being at 91.2 million shares. All right, with that, let us take a look at the analysts' estimates and the forecast for the stock price. There are 2 analysts on TipRanks, with both of them having a buy rating for the stock. The average price target for the 1 year for the stock is at $61. If that holds true, that shows an upside of 19.16%. If you look at the price target based on Yahoo Finance, it is the 1 year price target is at $57. And lastly, if you look at the current price compared to the fair valuation, according to analysts on Simply Wall Street, the stock is overvalued by 6.1% with a fair valuation of $48.25 at this time. And that does not necessarily take into account the projection for the stock and where it's going to be in the 1 year time frame. So keep that in mind. There you have it, folks. A quick look and review of 3 dividend There you have it, folks. A quick look and review of 3 Dividend King stocks for you to consider to buy or watch right now in the stock market, and stocks that, in my opinion, are worthwhile buying and holding forever, given their solid dividend payment track record for many, many years. In fact, increasing their dividends uninterrupted for over 50 years, resulting them becoming a Dividend King set of companies. And they are actually from different sectors. We had from consumer staples, we had from utilities, as well as from we had gas utilities. So a little bit of that diversification there for you there. Be sure, of course, to do your own due diligence and research before buying into this stock or any other stock for that matter. I hope you found this video beneficial and gained something of value from it. If you did, please don't forget to subscribe to Momentum channel. Here on Momentum Finance, we post every week several videos about investing in the stock market and ways to reach financial freedom. And of course, if you gained something of value from this video, please give this video a thumbs up and share it with someone who might benefit from this video as well. Are you invested in any of these stocks? What dividend stocks or Dividend King stocks are you considering to add or currently have in your portfolio? I would love to hear from you, so be sure to leave me a comment down below and let me know about that. With that, thank you so much for watching this video, and I hope to see you next time.